So,
Okay.
Julie, tell me the story of how you ended up specializing in mental health practices, especially kind of these group practices, private practice. Like, how did you become the fairy godmother of private practice
Of private
accounting?
practice. Very much an accident. When I started my own accounting firm, I was just a generalist taking on whatever client would come through the door. And one of my all-time favorite clients, Ernie, found me by accident. And Ernie is a therapist, still a client today, multi-million dollar practice, just living his best life. And when you do good work, people refer their friends. So Ernie referred a bunch of friends, and he also did some coaching. And so then we looked up one day. I had a couple of employees, and we've got a lot of therapists as clients, and we had been talking about specializing. So I thought, well, we really like working with these therapists. They're really nice, and we're kind of starting to see some patterns here between the
Mm,
therapists that we do have, and they were all group practices. Let's just lean into that and see what happens. And that was really
mm,
just the beginning of it. So completely by accident, but the more data we had, the more we could then get really, really deep in the weeds and of helping practice owners and figuring out, oh, those that are doing well are doing these things, and those that are
mhm.
struggling are doing these other things. And it doesn't take anything away from anyone to share that info. So that's how the specialization was born, and now that's what we do. That's what we specialize in.
You seem to have the simultaneous realization that I think a lot of us were having in the industry. I remember when I started this thing 15 years ago. I remember thinking, I'm really on to something that nobody else has figured out, like culture, and we're going to pay better. And then, 10 years ago, I start running into people around the country, and I'm like, you stole my idea. Like, you're running a group practice off my model in Vermont or something. And then
Yeah,
you quickly realize a bunch of us at the same time
yeah.
kind of came to this same, like, what better looks like. So you probably saw that on your end too, all these practices probably in clumps of making either good decisions, whether they knew it or
Yes.
not, or bad decisions. So I guess that would be my next question. As people go from solo practice, which is not that complex financially,
Yeah.
as long as more money's coming in, you feed your family, you're good. Quarterly tax estimates might be their biggest
Hmm.
aha moment. What are the big missteps or misconceptions or failures to plan when you watch somebody go from solo practice to group practice?
Yeah. I think folks often underestimate the amount of money they need to make that transition and the amount of effort that will be required as well. So often, if you see a solo practice where the owner really needs every dollar that's coming in, right? They need that for their household to pay themselves. And they think, oh, let me just add someone else. It'll be simple, right? Those are some famous last words. And you don't have cash saved up to reduce your caseload so you can train that person temporarily, so you can work on marketing efforts, so you can even recruit, hire, right? Do all the activities that are required to get someone in the building, or even in the proverbial building. Then they end up in a financially difficult situation. So I generally recommend somewhere between 2 to 6 weeks worth of wages for that new team member before their first day, right? Before you even make an offer. That's kind of the minimum. I would love to see even more than that, but I live in reality too. So that's usually what I want to see, so that you don't hire someone and then you're not able to pay them and they leave immediately, right? And then
Yeah.
you went through all that work for nothing. But it's going to take some marketing efforts, a lot more intake work and admin duties that is often forgotten about because you're
Yeah.
doing it for yourself.
Well, and holy cow, that reputational damage of if you ever miss a payroll, right,
Yeah.
in what is an adversarial industry at times, people have all this
Hmm.
agency trauma. The word getting out that you didn't pay your employees, even if you're off by a day, can kill your recruiting efforts. Yeah. So,
100%. Yeah. Or any changes, right? Even payroll mistake, or oh, we've been getting checks for the last couple of weeks. That's weird, right? Where there's maybe some
mhm.
payroll tax shenanigans going on in the
Yeah.
background. Yeah, you can do anything you want on the culture side. Like, it doesn't matter what you're doing. If you miss payroll, all bets are off.
Yeah.
Yeah.
Is it fair to say, because I feel like I see this coaching and in the peer groups we run, there was a notion that I'm gonna grow my practice as a way of simplifying my life. In other words, if I can just get some other clinicians in here, then I'll make more money, things will be easier, I can hire help. Uh, Years ago when I was scaling and made missteps. Somebody used the phrase like, "Oh, you're growing broke," right? Like, in other words, everybody thinks that that's the solution to the problem, and it only augments it if you don't have the right mindset. Do you see that on your end as well? This fantasy
Yeah.
that growth will fix?
I see a lot of people get stuck in what I call the small group practice, right? Like a
Mhm.
1 to 4 clinician. To me, that's the hardest part of group practice because you literally cannot afford any kind of administrative help, right? Or very, very minimal, if any. So as the owner, you're doing a ton more administrative work. You're recruiting, you're
Mm,
managing also people, which has a mental load to itself. And usually you're carrying a full caseload or very close to it. So while seeing almost no additional take home pay, right? So
mm,
kind of the worst of all worlds. You're doing a ton of work, not really seeing a significant amount more money, sometimes even less, right? That can happen as well, depending on how you set up compensation. So when that happens, one of two things will typically be the next step is like grow out of it, right? Just keep going, and then eventually it does get better, or you go back to a solo practice. Like this is not worth it. You know what? Never mind. Close up shop.
mm.
Just go back to doing it on your own. But that really small group is not very profitable, and because of the workload involved, just not worth staying in for a long extended amount of
Yeah.
time. Do you see that too?
There- What's that?
Do you see that too?
Yeah, I definitely see that. Well, I lived it, right? I mean, I think there's the point where we were 7 or 8 clinicians. And the year before, I had generated and kept probably $250,000 myself, right? And the clinicians were kind of paying all the bills. It was nice, kind of
Yeah.
100% payout for Ken on his own stuff. The next year, we started having to hire that middle management. So I started having to pedal even harder on my own caseload to kind of front that money. I collected $363,000 that year personally and
Oof.
kept
You worked hard.
83,000 for my household. Right, but it was
Okay.
all that like that growth that you have to
Yeah.
front fund, and so here I am working harder than ever, making less than a lot of the clinicians that I brought on. There's this moment where this is insanity. You can't
Yeah.
sustain this.
And can growth is often a stair step, right? It's not
Yeah.
just a linear path. So you at some point you have to slow down and build the infrastructure, but you're usually
Mhm.
doing that in advance of the revenue coming in, right? And so there's that initial investment that often gets overlooked and can really put practice owners in a tough financial spot if they're not careful, even if they grow too fast, right? There is such a thing as growing faster than your cash. And
Mhm.
that I have seen that unfortunately take a practice down on occasion. Like sometimes you can't undo that.
Yeah. Well, and a lot of us, I think, even pre-COVID, collections was pretty easy. I think the insurance companies were still trying to figure out behavioral health, and so they were just kind of approving all these claims. But between Change Healthcare,
Hmm.
increasing amount of desk reviews, all of a sudden the cash flow has gotten a lot more herky-jerky for people, and you can't just file a claim and count on that money being there in 7 to 10 days. Like it's not that
You
anymore.
can't. Yeah. Yeah. And
So.
if you don't have someone on the back end working those denials and trying to collect that last 10%, right? If you see your AR over 90 just ballooning, it's automatically going to put you in a tough cash flow position.
There was a clinician I was trying to recruit into our practice a few years back, solo practice clinician, great reputation, great clinician. Had lunch with her, and I said, "So how many are you seeing a week?" And she said, "Oh, probably 30 plus." And I was like, "Wow, you're killing it. Why would you even think about a group practice?" She said, "For the last 12 months, I've made $60,000." And I said, "What is going on?"
Wow.
She said, "I'm so behind on claims, trying to understand. Like I see all these clients and I go home and see my kids, and then I'm trying to figure out claims while I'm half awake at the end of the day. Like, so that claims process, you really do have to have that dedicated
Yeah.
person." So give me the lowdown on profit first, kind of what that mentality is, how that's different from standard accounting that you see in businesses, and even what that looks like for a private practice, a group practice, and how that kind of keeps them out of trouble, keeps them between the lines.
Yeah. So Profit First is different from an accounting system in the sense that it's really a cash flow management system, right? So it can live within your QuickBooks or Xero or whatever you're using for your accounting system. And the premise is that we, instead of using the traditional accounting equation, which is income minus expenses equals profit, that we're reversing that, right? So income
Mm,
minus profit equals expenses. So
mm,
we are building in profit to make sure that it always exists. Because when you do that, that means that you're going to have less available for expenses, but typically that you're naturally going to spend less and get more creative.
mhm,
And so one of actually the things that I built into the new Profit First for Therapists workbook is I started with the lifestyle worksheet where a practice owner will
mm.
build their ideal lifestyle, right? What do you need to run your life, your household, and what do you want, right?
Yep.
Because once you, I find that a lot of people in general, definitely business owners, just don't even know, like, what does it take to run? What do you need to contribute to your household each month, right? And they just don't know because that knowledge is power. Once you start there and say, like, this is what I need to be okay, let's build a business that can support that. That's ultimately the premise, right? That's what we're trying to build. So within the Profit First system, you're giving each dollar that comes into the practice a job. You're giving it an allocation.
Mhm.
You're saying, of this $100, 20 is going over here to overhead, 60 is going to clinician payroll, right? Whatever that may be, you're giving each dollar an assignment to make sure that there is money for everything, including for you, including for taxes, including extra for profit. Because the profit on paper, right, on the P&L, as you know, it has some heavy lifting to do, right? That's the money that is used to pay you as the owner, to pay your taxes, right? The business itself does not pay federal tax, it flows through to the business owner, so it has to pay your taxes. But that's also the cash that you have available for reinvestment in the business, right? For savings, for expansion, for all of that. So if you don't plan on that, there's just not going to be anything left typically.
Yeah. And then you start playing the shell game, right? Like you start kicking your kids' tuition down the road or whatever,
Yes,
right? And that's the I think the vicious cycle. So
yes,
is this the equivalent? Is this the business equivalent of the old envelope system, right? I've got my
that's
envelope
exactly
for,
it.
dining out, my
Yeah,
envelope. So like, how does
yeah.
this work account wise?
It's exactly it. So I recommend either 5 or 6 bank accounts for your kind of foundational accounts for Profit First, and that depends on whether you have a solo practice or a group practice. So in a
Mm,
solo practice, you're going to start with the income account. That typically your current checking account will become your income account. We don't want to disrupt insurance payments at all. So current checking becomes the income account, so deposits only, no expenses going out of that account.
mhm,
Next, we have the operating expenses account. That's for all your kind of overhead items, rent, liability insurance, software, all the stuff that it takes to run the practice. Then next for our group practices, we have the payroll account. So that's where you're going to connect your payroll system, right? Whether it's ADP, Gusto, Paychex, whatever you're using. That's your wages, payroll tax, and benefits for your clinicians, your admin team, your leadership, yourself if you are on payroll. Next,
mhm,
we have an owner's pay account. That's meant to pay you as the owner. Now, the mechanics can differ, right? Sometimes the owner's on payroll. Typically, you're also getting a distribution or a draw outside of payroll, right? So that account can hold that to make sure it doesn't get accidentally lost in other things. We have a tax account. And then last but not least, we have a profit account that's meant to be both half savings and half reward. So
mhm,
you let the money grow in that profit account at the end of the quarter, that becomes you leave half of it in the account as an emergency fund, you take the other half home, like as if you were a shareholder, right? In a dividend paying stock, you would get a check at the end of the quarter. That's your check from the business to say, hey Ken, thanks for being a business owner, here's
mhm.
a little reward, right? It's meant to be above and beyond your living expenses. And the feedback I get from a lot of business owners is it makes them feel good about, like, okay, this is a lot of work. I take a lot of risk, but like I'm getting this check. Sometimes I'm doing something like a weekend away or maybe a trip to Disney, right? Depending on how much it is, like it can be significant.
Yeah. So we nickname that at least in the peer groups we run, owner's premium, right?
Hmm.
There needs to be a premium for the
Yeah.
fact that all of you could get me sued, you could all quit, and I'm stuck with these leases. Like,
Yeah.
if aside from the altruism of it, if you're making the same thing you're making as if you work by yourself, why are you putting you and your family through this? There's got to be a a premium there. And I think that's what that account honors. And that's another way that we say it a lot is we don't do profit first with everybody, but it's still the core concept of this business has to honor your household,
Yes,
right?
yes,
First and
yeah.
foremost, otherwise, what's the point? So,
And I think it's a completely unselfish thing to do, right? I think if you're going to build a business and put all of this blood, sweat, and tears into it, like it should be able to take care of you, whatever life that you want to live. Yeah,
there's a therapist by the name of Prentice Hemphill. I don't know if you run across Prentice. They're kind of a talking head in the space, but one of their quotes that I love is boundaries are the distance at which I can love both you and me. And I've turned the business version of that when I go speak and stuff is a great business is one that you love working at and I love running. If it fails to be that for both of us, then we probably need to reevaluate.
yeah,
Where do credit cards fit into all this, right?
sure. Yeah.
So
I don't mind cards at all. I think they can get people in trouble, but I use credit cards in my business. I enjoy the airline mile, right? All of that. So the way we manage credit cards is they get paid from the operating expenses account because most often you're not putting payroll on, on credit cards, or I hope you're not. So it's most often operating expenses. And so what I also recommend in the workbook, this is a new recommendation, is a lot of people were getting stuck with, well, there's not that, like, my credit card payment is 22,000 and now I only have 12,000 in my OpEx account because they thought they had more money than they really did. They did not consider that the credit card payment was coming up, right? And so that's just often something that happened. And so my recommendation now is every time you transfer money into your profit first accounts, just pay off your credit card. Whatever the balance is, just pay it down. The credit card company does not care if you pay it 2 weeks early, right? Just pay it down so that way you have in your bank accounts a realistic
yeah.
um, picture of what you have available to spend. So that's the easy workaround. Just pay them off.
So we did that for years. Now at our size, it's a little less of a needed discipline, but it worked really well. I just took what I expected my monthly average recurring credit cards to be, divided by four, and we set up a weekly payment for
Yeah,
1/4 of what. And so at any like the credit card never hit its limit in those early years when money was actually tight, and we never got to the end of the month and we're like, oh crap, we owe $30,000. There's
yeah.
no
Like,
money. It
how
forces
do
the
we
money
do
out of the
this?
account.
Yeah.
Yeah,
Yeah,
so.
absolutely. And often, Ken, I do recommend, like, once you kind of got the basics figured out in Profit First with those 5 or 6 accounts, then it's helpful to add maybe one or two additional accounts that are helpful for your practice, right? And that looks a
Mm,
little bit different for everyone, but we will have sometimes folks do open up an expansion account, right? I want to add a location next year. Let me start saving over here on the side to start paying for leasehold improvements, right? I'm going to need 50 grand, 100 grand for that space. Let me
mm.
save over here. Or I plan to hire a new leadership position. I think that's going to be pretty expensive. Let me put funds aside over here, right? So it can have a lot of different names, but you can customize it in a way that's helpful for you too.
They call it a sinking fund, right? Isn't
Yeah,
that the old term for
yeah,
that? Sinking
yeah,
fund? Yeah. Cool. So one of the things I get asked all the time, and also I think this is why we probably love you as our fairy godmother of accounting versus a lot of our CPAs who don't work with our industry, is we hear about benchmarks, right? And in particular, I think a lot of us get grief from accountants that don't know the industry of like, you need to be paying people 40%. There's just no way in our industry. Are there benchmarks for you within practices of like, here's what you should be spending on labor, on yourself, on marketing, on rent? Like, I think people are always interested in like, what is normal and healthy? Do you have rules of
yeah.
thumb
Yes.
on those?
And they are in the book. I'm happy to share that with you here. So I generally think for most people, most clinicians in your practice, right? So the clinician, not necessarily leadership or not necessarily you as the owner, but clinician, they usually should get paid somewhere between 45 and 60% of the revenue they generate, right?
Mm,
So that includes wages, payroll tax, and benefits. So that means you can't usually pay them a 60% split.
mm,
And I'm not saying that every single person in your practice should get paid that much, right? Sometimes you will have someone who's really senior and
mm,
just workhorse, does a great job, that needs to be at a higher rate. But on average, we want also the average for the practice to be somewhere in those ranges, right? And so a private pay business might be able to get away with a lower percentage, right?
Yeah.
Whereas an insurance practice might not, but somewhere in that range is typically going to be good for a fully licensed clinician. And when we look at pre-licensed, we're usually looking at a 30 to 40% range because the expenses associated with that clinician are significantly higher. So somewhere in that 30 to 40, 45%. They are going to churn clients a lot faster. They're going to require a lot more marketing to keep them full, and they
Mhm.
require supervision, right? There's some mental labor, and there's someone who's, whether that's owner or someone else, who's signing off on those notes, case consultation, all of those things, and we've got to account for that in their comp as well.
I feel like, and if you're a clinician that works at a practice or a solo clinician, don't hear this the wrong way. But I feel like the industry is probably unsustainably high on
Yeah,
compensation by about 5 to 10%.
yeah,
I mean, we pay 60%, and for 4 or 5 years, we barely broke even because when you add in benefits on top of that, you're now pushing 70%, right? With FICA and everything
yeah,
else. At scale, it works. You know, we're 15, $16 million, so we can get away with it, but it's still a pretty narrow margin. The smaller practices that I'm coaching that are in that range, like there's no fat left on the bone. There's no
yeah.
ability to expand, no money to invest in marketing. I feel like if the whole industry could go back and reset 5 to 10% lower, we would have much more sustainable practices. So I'd love to hear your thought on that, as well as this kind of bidding war that is occurring between practices. Well, we're paying 65, we're paying 70, we're doing 1099 as our way of paying more. Like it feels unsustainable. Like you
Yeah.
can't pay out 75, 80% in comp and actually run a sustainable practice. Any thoughts on all that?
Yeah, I would agree completely. You cannot pay 80% and still stay open more, for the long term. Like it's not possible. We've actually seen it happen, and you have two choices in that case, right? We've had clients come to us say, "Here's my comp, gasp, what are we going to do?" So you can close the practice or you can change comp, but there's really no way, like there's no phone bill or efficiency that you can create to make that work, right?
Yeah.
It's not possible because 80% plus payroll tax, even if it's just payroll tax, no benefits, it's still going to cost you 85, 88%, right? Like depending on the state that you're in, there's just not enough room. So I get hate online, Ken, about my ranges, like that I'm encouraging people, practice owners, to pay too little to clinicians. I think the hate I get is mostly from like employees or people working at practice, and that's okay. I will take it all day because I will die on this hill. Like if you overpay your team, you cannot run a sustainable practice, right? And there's all that invisible labor that the team members forget about. And it's not their job to know about it, right? But people will say, "Oh, I'm going to go out on my own because I will keep my full fee." Literally, no one gets to keep their full fee in any industry at all whatsoever, right? So
And you lose some of the efficiencies.
absolutely,
You don't have somebody
absolutely.
filling your empty slot in the next hour that just canceled. The yeah, I mean, I think the belief there is uh, I'll attract enough clinicians that we can put enough revenue through at scale, at size, that 20% will cover it. I think what I've seen all along the way is that growth happens and you can't be the practice admin anymore and be the practice CEO. And so I think those practice owners were absorbing a lot of duties that at least for a little while made it artificially sustainable. And now you have to hire help,
Yeah.
and there's nothing left when you hire
And there's
help.
no room, right? And so often that problem comes up just from a place of kindness, right? Where you're hiring that first, second, third person saying like, "Well, I'll do it, right? I'll be the one handling the intake, so it's not a big deal. I can pay them 70%." And that's great, but when you have 10 clinicians and you need to hire intake, there's no money for it. So if you don't
Mm.
build it in, it won't be there later, unfortunately. Yeah.
Do you, in your mind, do you have a bare minimum threshold or a rule of thumb for what is a healthy margin and or owner's compensation for a practice? Is it size banded? Does it change based on how many, how big you are, kind of thing? What what
Yeah.
what's the upside of owning a group practice if
The
it's healthy?
upside for a group practice, and for I'm going to think about this in a $1 to $8 million range. I'm usually aiming for 20 to 25% profit margin. So owner's compensation, right? If you're on payroll, I'm including that in, but like what is the owner's taxable income essentially? I'm aiming for 20 to 25%. And sometimes we'll slip from that, right? I'm not mad at you if you're 18, 17, but like we're still aiming for that. If we're aiming for that, we're going to end up close.
Mhm.
And so that's what I'm usually going for. In the smaller practices, typically that's going to be a little bit higher, right? If we're looking at a solo practice, that's usually going to be at least 50%, but you're the only one doing the work, right? If you're not working, no revenue is coming into the practice. So it's just you're getting a bigger piece of a much smaller pie.
Mhm.
And so yeah, that's usually what I'm aiming for. The margins do get slimmer above 8 million in revenue, but like really in that 1 to 8, that's super doable.
Yeah.
It's very possible. But it does take some work, right? You have to keep that eye on profitability always
Yep.
for that to be possible. And that's really 60% on clinicians, 20 or so percent on everything else, right? Admin, overhead, rent, all the things. And then that leaves about 20% for
Yeah.
everything for profit.
My former world was Wall Street, and then I became a therapist, and I've wandered back into the investment banking side and involved now on the transaction side with group practices. I a lot of the buyers don't want to see anything less than 15%, 20% is ideal. And you need to be looking at least a $500,000 a year to really be sellable to an outside party who doesn't know you. A
Yeah,
million is even better, but
yeah,
that 15 to 20% number is they don't care about your revenue, no matter how big it is, if you're not double digits and healthy, right? Not
yeah.
artificially crimped down. So
And I see very few deals under 1 million in EBITDA or profit, right?
yeah.
Do you see a lot of them in the 500K even?
If it is truly running without the practice
Okay.
owner, so when you're $400,000 in overall profitability, however you cut it, right? Owner wages, whatever, but you're generating 200 of it yourself, you're not really 400, right?
Yeah,
But if you're 400, 500,000 and you're doing this thing 3 hours a week and it's dialed in, there's going to be somebody that's
yeah,
interested. It's not an 8 to 10 multiple,
yeah.
but somebody might pay you $1 million for that, especially if you let them buy you on contingency, right? Like
Mm-hmm,
as long as
mm-hmm.
it performs, I'll pay you this over 3 years. But I
Yeah,
think there's a lot of practice owners that are stuck right now with something that feels like a good income. So surely somebody would pay me $1 million for this. The reality is people are not buying $250,000 a year EBITDA practices for $1 million.
yeah,
They're not buying them for 500,000 in my experience. So once that number, it really hurts you as you get smaller.
yeah,
When it comes to employee compensation, things like that, there's a lot of arguments. I know you're going to do another workshop down the road for us on this, but there's a lot of arguments going back and forth on 1099, W-2. There's all kinds of drama around it, all kinds of shaming, finger pointing. Um, uh, Give us the skinny on that. Like what's the
yeah.
lowdown on W-2 versus 1099?
Yeah, I think it's a risk question, right? Ultimately, in the last 5 years, what the IRS, the Department of Labor, and states have shown us is they are increasingly removing options for clinicians doing the main work of a practice to be 1099, right?
Mm,
That's what we're seeing. The legislation is doing that. So we're seeing some enforcement at this point, but really when legislation starts going in a direction, at some point the enforcement will come, right? So
mhm.
I'm team W-2 just because in my personal life, right? I'm my perspective is like if you could get in trouble in one way and not you're not going to get in trouble with the other one, like let's do the one where you're not getting in trouble because why take the chance, right? This is not a chance that feels worthwhile to
Yeah.
me. um with the main thing of your business, right? So like I'm an accountant, I don't hire accountants 1099. I will hire a marketing, a website contractor 1099 for sure, right? All day, because that's not the main thing that we do. But just in that place in your business, like also, as a business owner, I 100% want control over what's going on in the practice, or even if I don't exert it all the time, I want to be able to control it. So I'm team W-2.
Especially with stuff that can get you in big trouble
Yeah,
on a federal level, like
absolutely.
HIPAA and stuff like that, right? Like I
Yeah.
need those tighter controls. So aside from profitability, right? And I always tell practice owners, like if you have one number that rules them all, right? Kind of a EOS, everybody's got their number. It's profitability followed by maybe cash, right? Those are
Yeah.
linked. But if you're not profitable, there's no point. A good job that doesn't exist in a year is not a good job. Aside from profitability, what are the metrics that you think practices should be monitoring, caring about, gamifying because they have the highest correlation between paying attention to them and success? What
Yeah.
else besides profitability?
I mean, definitely session count, right? And
Mhm.
what's important, what the number you want to hit is going to be different for every practice. But I would look at that at least weekly, what's
Mhm.
happening in the practice. Because when you see that in December, like, things are going, oh, it's dropping, you're going to have a cash problem 1 or 2 weeks later, right? You know that
Mhm.
cash problem is coming. Fee per session. Average fee per session. And to me, that number is not a scientific one. It's just like good enough, back of the napkin calculation because it will usually tell you if something's going on, right?
Yep.
If all of a sudden it goes really low, something is up. It's usually a canary in the coal mine, so that can help you figure out something's wrong. AR numbers, like you should know what's normal for your practice. Solo practice might be $2,000, 100,000 for a group practice, right? It just depends.
AR means what for those that have never heard that
Accounts
term?
accounts
Yeah.
receivable. Yeah.
Yeah.
So
The money
what's
that you're owed.
yes, money that you're owed. So that number is usually in your EHR or your EMR, right? Your therapy notes, your simple practice, like in your um accounting in your reports, it will say how much is due in 0 to 30, 31 to 60, right? It will tell you how much is overdue. So especially those longer dates, like why is cash hanging out that has not been paid? You should have 0 to 30. That's always you're always going to have something, but something's
So
up.
it made me think of this. We've just started really pushing practice owners. You get these practice owners that get somebody in there that they hope can do billing, or they
Yeah.
hired a mom and pop shop that does billing. Like, how do you actually stay on top of a biller for a therapist who doesn't even understand billing? One of the things we started encouraging people to look at is your revenue per payer session. So look at Cigna for the month. What's your total Cigna collections divided by
Mm,
sessions? Because that's where you'll catch something's going
yeah.
wrong with a payer. That's that
That
same
specific
idea if
pair.
you look at revenue per session. But how do I know if my person is not dealing with the Cigna claims because Blue Cross is just easier? So that's been a helpful one. Um, talk about uh, the do I pay on percentage? Do I pay salary? Do I
Ooh,
pay hourly? There's a lot of debate
yeah.
around that.
Controversial.
Yeah.
And you and I have actually had sidebars about
Yeah,
this
right.
separately. I am team flat fee per session. That would be my preferred for this reason. I think in most cases, when you're paying a percentage and insurance rates increase, which honestly has not been that common in the last couple of years, but when insurance rates increase, your clinicians automatically get a raise. There's nothing bad with that, but they are still going to come ask you for a raise, right? To them, a raise now means I want more percentage. And
Yeah.
so
Yes.
it's hard to win in that sense, right? And
Mm,
so for that reason, I like a flat fee because if you do get a raise from insurance, then you could say, hey, we got a raise. I'm going to share a part of that with you. Here's more money, right? Like you can intentionally, like, I'm giving this to you. It's not the insurance company that gave it to you, it's I gave it to you.
you
Um,
can raise them by $1, but that wasn't 1%. I mean, you can
yes, like you
it's a
have
win for everybody.
more control over
Mm,
ultimately and that's ultimately what I'm after as an accountant is I want you to have control over your single largest
mm,
expense, which is your clinician comp.
yeah.
I do think if we see some rate decreases, that's going to be a problem, right? That will
Mm.
be a problem. Where in that case, if we do see rate decreases in 2026, percentage would have been better. But overall, I just generally like a flat fee per session best.
Yeah.
That's my 2 cents.
So one of the things that we say a lot in our peer groups, right, is the real client is your clinicians, right? Without the clinicians, clients last 10, 12, 20 sessions. Clinicians hopefully last a few years. Hopefully they decide to hang their hat forever with your practice. So I think there's this kind of mad dash to onboard and find clinicians. I think a lot of the trends in the industry are clinicians are leaving not to go to other group practices, but start their own solo
Yeah.
practice. So there's kind of this mad dash to onboard, which I think can lead to some hidden costs biting people kind of in the rear. When you look at adding clinicians, when somebody comes to you and says, "I want to hire more clinicians, Julie, I want to expand," how do you help them know if they're ready to do that financially? What should they plan for? You already kind of mentioned, have a certain amount of revenue in the bank for them or cash set aside. Like, what are your metrics for growing your clinician count?
Yeah. Yeah, it's very different to onboard and fill one clinician versus onboard and fill five, right? And so
Mm,
sometimes you will have a couple of great applicants, and sometimes it still doesn't make sense to onboard all of them at once, right? Because it's a question of all boats must rise at once, and so
mm,
you have to have enough people to train them, but most
mm,
importantly, you have to have enough clients to get them full, right? And so
mm,
if you usually have 100 intakes per month. That's great, right? You know kind of at which pace you can keep your existing team full depending on the size of that team and also then fill someone
mm,
new. But if you're hiring five people, you have five new mouths to fill, and you still only have a system that can create 100 intakes per month, like we're going to have a problem, right? Either they're saying, I'm not getting enough clients, I'm not making enough money, I'm leaving, right? So you have to also have a system that can scale
mm.
intakes at the same
Yeah.
time, which usually means more dollars forked over to marketing. So, like ideally, it's a system that you can dial up and down as needed, but that's easier said than done, right?
So one of my favorite exercises, and we did this in our practice forever, and I think it was a lifesaver, and I do this with other practices now. We call it breaking at scale is the name of the exercise. But great, what's the number? And by the way, I think all the coaches all the coaches, a lot of the coaches in our industry have people obsessed with vanity metrics like revenue,
Hmm.
get to seven figures or whatever. It doesn't matter if you're actually losing money, right?
Yeah.
And so, okay, you're going from 500,000 to 1 million. That's a doubling in size. What in your system, whether it's room space or your ability to answer phone calls or how much, how many lunches the fridge holds, when everybody puts their lunchbox in there, what breaks at scale, right? Double everything or whatever it is, and all of a sudden it becomes really clear that often by asking my scheduling team, hey, if we doubled in size, how would you feel about that? Oh my God, Okay, so we're going to have to invest in that. And then you see that weird kind of herky jerky where we grew and now there's pain points. So I need to hire more people, but now I
Hmm.
feel like I don't have enough revenue coming in. So and they kind of just keep jockeying back and forth in this like upward death spiral of growth, it seems like. So,
Yeah.
uh,
And Ken, I don't know if this was your experience, but in my business, I feel like every time we double in size,
mm,
like things are going to break, right?
mm,
Like there are things that need to be fixed. And so, I'm 10 years in, so doubling in size just takes longer at this
yep.
point, right?
Yep.
But still, every time you double, like that's a big change. Things are
Mhm,
going to break and you need new systems and better systems, and what used to work didn't
mhm.
didn't work. And so just saying like, let's go to, 1 million or 5 million, that's great, but there's a lot of shoring up that needs to be done typically for that to
And
be
that's before
possible.
we even get to the cultural piece, right? One of my
Yeah.
jokes is everybody's in favor of growth when it means they get a job. And then as soon as they're here, they're like, why are we growing so fast, right?
Yeah.
And I think these practices, mine included, that have grown really quick, there's a lot of narrative, and it's not incorrect, of this practice was so different than I joined. Yeah, we were half as many people. I could go to
Yeah.
lunch with everybody every month. And now I'm working till midnight just
Not
trying to
possible.
assemble
Yeah.
furniture fast enough to. One of the other things that we talk about a lot in the 1F and the Streamline groups that we run is growth versus scalability. And the analogy that we really like there is if you've ever been working with like a picture in a graphics editor and you drag that bottom corner out and it gets bigger. Sometimes there's pictures that at any given size, you don't get a diminished quality. And then there's other
Yeah.
ones when you drag it bigger, it just starts pixelating. You can't even
Yeah.
see what the picture is. That's that growth without scalability. Like you lose the quality of the picture, the quality of your practice by growing it too quick.
Yeah. Absolutely.
So one of the things, right, we see a lot of, and I think you see it with people leaving group practices and going solo and burn out group practice owners who are tired of Change Healthcare and blah, 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 oh, we're just going to go private pay, right? So do you have opinions or even observations on practices that take private pay, practices that have a more diversified payer mix? What happens in a recession to these different
Yeah.
practices? What's your
Yeah.
take on commercial
Um,
insurance, private pay, Medicaid, all that?
Depending on the market, private pay practice in Washington, D.C. in a very, business government area, or maybe not this week, but versus, Middle Tennessee, those are going to be very different, right?
Mhm.
So in a big city, DC, New York, LA, San Francisco, you're going to see a lot of generalist private pay practices. They do great. In other areas that are maybe private pay isn't as accessible, we'll see more private pay practices be very specialized, right? If you
Mm,
only work with children with OCD, great. Like you can then warrant that out of pocket fee, right? And that higher fee, but just for generalists, like people are going to go use their insurance.
yeah.
So you can definitely make good money as a private pay practice can expect to be closer to that 25% range and the 20 to 25 if they're doing things right, right? They are still victims sometimes of overpaying clinicians, of not, just spending unlimited dollars on marketing and not really looking for ROI. So they can still overspend in a lot of areas, but they're typically the first hit in a recession as well,
Mhm.
right? So there's
Yeah.
kind of all of those balancing pieces where I mean, it definitely can work, but you're always spending more money on marketing 100% of the time in a private pay.
Well, and so we've started doing this practice owner confidence survey. So once a
Yeah.
month we're surveying practice owners, and a few of the conferences I've spoke at recently, we were able to get the practice owners to submit their P&Ls, their profit and loss statement,
Okay.
statement anonymously. So we just went through and looked at it. The average practice is spending about 1% of their revenue on marketing. Whereas any other established service industry, it's closer to 10%. So in other words, we're in this kind of environment where everybody wanted therapy for a few years. It was a rapidly growing industry, and I don't know that we had to market a whole bunch.
Yeah.
And now all of a sudden that is there's a little bit of scarcity, and I think even more in private pay. So one of the things we look at in our practice, one of the things we look at is calls per clinician as a metric,
Hmm.
not just in our
Interesting.
practice, but in the market. So there's 2 million people that live in the greater Omaha area. There's 9,000 private practices. There's a estimated number of calls per private practice based on market size and number of clinicians. If the market doesn't grow and the number of clinicians do grow, then there's less calls per clinician. There's
Hmm.
more phone
Hmm.
numbers on the internet. That the term they use a lot is the total addressable market, right? You hear that in marketing, this total.
Yeah.
So the private pay total addressable market's a smaller subset of that. And if everybody is rushing into private pay, then there's even less calls per therapist for that. So I see a dilution coming, if you will,
Yeah.
in space.
Yeah. And we see on average about 1% for marketing for an insurance practice, and it's closer to 3 to 5% for a private pay
Yep.
practice. So the economies that you're seeing in clinician costs are usually offset by marketing, just because you're
Yep.
going to need a lot more calls or contacts to convert. You're going to
Yep.
convert at a lower rate. And Ken, from a philosophical perspective, like I will be the first to say, I think insurance reimbursements are too low for private practice, right? Like I don't think that is sustainable either. Something's got to give. And so in my mind, the simplified version is, well, if everyone goes to private pay, then there's no one on insurance. Like they have to do something, but I don't know that it's that simple because like
Yep.
people have need to put food on the table, right? Like the reality of small business is not everyone can go to private pay and like band together and solve this. It's not that
Well,
simple, but I don't know how to
and what
fix
I've
this
seen in,
problem.
sorry, go ahead.
I don't know how to fix this insurance
Yeah.
problem.
What I've seen in some markets, right? I cut my teeth as a therapist in California before I moved to the middle of the country. When everybody's private pay, one of the easiest marketing strategies is just to charge a few dollars less than everybody else, right? So you underbid But then everybody else has to underbid that to compete. And you get a race to the bottom sometimes. Like you'll see these really wealthy, well-heeled parts of the country, and they're getting less for private pay in neighborhoods that make three times what Little Rock or something makes. But Little Rock, there hasn't been a race to the bottom yet. So that's my one of my fears there is clinicians are as a group are hurting themselves by all trying to do this underbid. It's downward pressure on prices.
Yeah.
When it comes to practice profitability,
Yeah.
like if somebody walks in and says, I need to get more profitable and comp is untouchable right now, right? Like in other words, I can't cut clinician pay. Aside from that, where would you start looking to increase
Yeah.
profitability in a practice? What are the
Okay,
usual
so I
suspects
will
there?
asterisk that by saying I don't think comp is ever untouchable. I would say you're very because in part because even if you're not willing to touch comp for your current team, your very
Yep.
next hire
Yep.
can be at a different comp rate, right? Like I
You
think
can
that's
phase in.
always at least something.
Yep.
And then eventually you'll cycle out probably. I would look at the usage of your space.
Mm,
So many times folks will tell us like, oh, we need a new location, need more space. Like, do you though? Do you? Because your space is really being used 30% of the time.
yeah.
It's not easy, but if you are using it efficiently, which people in big cities have to do, right? Just because
Yeah.
rent is expensive. So if you're just using your space more efficiently, no one gets their own office for 20
Yep.
hours a week, right? Like everyone is sharing and you have shifts and you're filling this space and you're hiring for specific days and times, you can easily grow a lot more usually in your existing space. And
Yeah.
then your rent becomes like 2 or 3% of income. And that's a great place
Yeah.
to be, right? And then you're in the same problem, like we don't have enough space again. And you can go look for more space because you know how to use it efficiently. That's usually the biggest bang for the buck.
One of the things that gets me hate online is the notion that we cannot be a therapist lounge. In other words, yay that you only want to see 20 clients a week. I cannot have you just hanging out and doing notes in that room the rest of the time. It creates a financially unsustainable model. And we have from the get-go in our practice, one of our values has always been nobody owns a room,
Okay.
right?
Yeah.
You can help decorate it, put your fingerprint on it, but
Sure.
when you're not using that room for clients, we need to use it for somebody else. My rule of thumb, you may have some rules of thumb on this, but it's served us really well. We see every room as having 8 hours a day of capacity. Yes, it can have more, but you could probably get away with 8 sessions, 5 days a week. So that means in any given week, every room can support 40 sessions. I found that when a room is 75% booked with actual clients, not just a clinician saying I'd like to see clients, but 30 out of 40 hours are booked, then you struggle to fill that last 10 just because there's not enough
Yeah. Of the
flexibility.
timing. Yeah.
So our general rule of thumb is until a clinician is filling 75% of the time they have, the room they're using, we don't add more space. You got to get to that 75% full before we consider it.
Yeah.
So speaking of
Yeah.
owning, oh, go ahead.
So my rule of thumb is actually also 8. I do consider that you probably can get away with 4 on the weekends as well,
Mm.
right? They're harder to staff and they're not going to be not every single room, but if you're aiming for 8 between, evening, having someone come in on the evenings, a Saturday, like you can definitely get to 40.
Well, and I think a lot of clinicians, or a lot of practice owners have thought in terms of I have to hire full-time employees.
Yeah,
Part-timers are gold as long as you can get them above a certain amount that's
yeah,
sustainable. Like three clients a week is not enough, but 12, 15, whatever, it's not maybe quite as profitable. But there's a whole swath of clinicians that work at the VA or wherever. They're never going to leave because they have an amazing
schools,
pension,
yeah,
schools, whatever. And they would love to moonlight and pick up a couple evening shifts a week and a Saturday appointment to pay for their kids' college or their
yeah,
cruise or whatever. I think that whole crowd not being marketed to for your practice is a missed opportunity. So
yeah,
ownership, it's one of the things we get asked about a lot. It feels like done properly. Gosh, I'm already paying rent. I'd rather just buy the building and own it. Like there's surely advantages to that. Where does it not make sense
yeah.
for somebody to try and buy their building? And what is the psychology that you see behind I need to own my building?
Yeah. I think it's often used as a vanity metric.
Mm,
It's almost like a sickness, right? If we see, oh, so and so in this city bought a building, okay, we know kind of all the practices in that city are going to ask us about, or all of our clients in that city are going to
oh
ask us,
yeah.
like, hey, so and so bought a building. Should I be buying a building? What should I do, right? I think a building can be a great choice. It's not always the right choice for you, depending on
Mm,
your goals and your circumstances.
mm,
One thing that does happen when you own the building is a tendency to fit the business to the building versus
yep.
the other way around, right? When you don't own it, you have flexibility. If you're out of
Yep.
space, go get a new space that's bigger that fits the business now. I think a lot of practice owners do not realize how much cash you need to buy a building. You're
Mm,
typically looking at a minimum of 20% down, if not 30%.
yep.
And a lot of people don't have that kind of money, right? And that should not take every last dollar of the practice, because buying a building, like everything in life, is always more expensive than you think it's going to
Yep.
be, right? The closing costs are not usually rolled into that mortgage. You're going to have to repave the parking lot, whatever. So you should still have an emergency fund for the business after putting that down payment down. But last year we had a lovely client, love her. Landlord asked, like, hey, do you want to buy the building? I'll sell it for about 1.1 million, I think it was.
Mm.
And she had $22,000 in her bank account. Like, there's 0% chance of that being possible, right? As much as I love this for you and I wish it were possible, there just is not much. And like, you should not put your business at risk to buy a building.
The
That's,
the ego stroke that you get, that dopamine rush of buying the building, is quickly offset by missing payroll, right?
yes,
Like
yes. Like,
that, like congratulations, you bought a Mercedes and can't put gas in it.
and
Like,
yeah,
yeah.
it cannot put your business at risk. Like, that's me putting my foot down. If it's even remotely close to putting the business at risk, it is not worth it. Don't do it. There will be another building later.
Yeah. My general rule of thumb too, I mean, we're 22 locations. We own about five of them, and I've turned down a lot of buildings. One, that cash has got to be there. It can't invade the operational nest egg. But number two, my general rule of thumb has been I have to get enough of a savings, enough a drop from rent to the payment, not even the equity piece, right? Because that can be like you can, well, I'm building equity. Well, it's still not cash to pay
Yeah,
payroll. If I get enough of a drop that I can recover my down payment within 12 to 24 months, it's generally felt like a win. If it starts taking 4 or 5 years of cost savings, which again, the costs are always higher, to even get back my down payment, then what's the point, right?
yeah.
So,
And
uh,
do you typically buy buildings where you are the only tenant, or where there's other tenants as well and you're renting some
so
space?
probably like a lot of people, I'm intrigued by the idea of passive income, right? It would be great to have a strip mall where everybody's paying me and it pays my rent. But as it's played out, so we have a lot of rural locations.
Okay,
So in those rural locations, you have a lot of converted houses that are now,
okay.
they
Like
were,
older
we
homes.
just bought a converted house that was an 8 room doctor's office, for $300,000 or something, right? And our savings was huge. I think I generally try and dissuade, and I'd be curious to know your opinion, practice owners from becoming a landlord at the same time. I think the temptation is they'll pay rent until I need the space and then I can expand there. Being a landlord's a whole nother business. And by the way, when the AC on the roof goes out, which you have
Yeah,
to crane up there at another $8,000 cost or whatever, like it's brutal. You've now made your life more complicated. So,
yeah,
should we
yeah.
become landlords as part of
Um,
buying a building? What do you think?
Yeah, it depends. I don't have as strong of an opinion there as I have in other areas. I do think it's underestimated often how long vacancy can be in commercial versus residential, right? Because if you think of a
Mm,
residential house, like someone leaves, someone else will come in. Whereas commercial buildings will sit vacant for a year, 2 years sometimes, or not necessarily the whole building, but the suite.
mm,
And if you need that rent payment to make the mortgage payment, you're up a creek. So
yeah.
I think it's proceed with caution, right? Even if someone has been there for a long time, it's not a guarantee.
I've also seen, especially in not crazy real estate markets, so some of these more rural areas, more and more building owners that are willing to carry the note as well. In other words, I'll let you basically buy me. I'll be the bank. You can pay me. You want to have a good contract around that. but they have a liquidity problem themselves. There's not a lot of buyers for building like that. What
Yeah.
I encourage practice owners is if they're willing to carry the note, they probably can't sell it anyway. Be tough on price,
Yeah.
right? Ask for
Yeah.
a discount, ask for good terms.
Yeah. There's
Um,
a reason, right? They're carrying the note. Like it's not easy to sell it. So if you need the cash, it's going to be hard to sell as
yeah.
well. Yeah.
Yep, that's exactly right. Okay, so we're coming up on the holiday seasons. I know there's a couple times a year in Arkansas. It's as soon as the weather gets warm, everybody starts missing their appointments and going to the
Yeah.
lake. Do you have tips aside from maybe like just carry cash, build up cash? How do practice owners plan for and manage and survive irregular cash flow seasons?
Yeah. It's not just private practice, right? Literally almost every industry goes through that. And so it's a part of business,
Mm,
and we have to become a more sophisticated business owner. Sometimes we have to just go through that realization of, oh, this great month, I cannot count on this every single month, right? There's this
mm,
tendency of like, oh, we did better than last month, we did better than last month, it will keep going forever, and it doesn't. And so in the good months you do have to be thinking ahead um of the slower months because we generally know they will happen. But also, I think there are some really proactive conversations that you can have now with your team and with them, with
mm.
their clients, right? For example, the conversation that we're having with a lot of our clients who are practice owners is, hey, remember, not everyone can be off at the same time in
Yep.
December, or you will have a big cash flow problem in January, right? So, like, let's try to prevent that. Let's start having discussions now on what is the limit, how many people can be off, like how many days. Let's not just wait for it to happen to us. Like you as the owner have control over that and can put limits on that so that you are okay, so the practice is okay. And don't give away that power.
One of the places that so PTO is still, I think, one of the unsolved benefits in our industry for private
Yeah,
practice, right? Like we want to give people PTO. It's a little bit of a rub because you're probably making more than you've ever made in your agency setting that you came from, but people still want PTO.
yeah,
Okay, that's fine. So you get the everybody goes off at Christmas time, and that's when they cash in their PTO.
yeah,
So you not only do you not have the revenue coming in, you now have even more pay going back
yeah.
out, and it's I
Double
mean
whammy.
panic mode, like line of credit time, all that kind of stuff.
Yeah.
So let's see, a couple more questions, and I'll let you sneak out of here. Let's talk about a little bit of a weird, sensitive thing, which is embezzlement, financial mismanagement,
Mm,
clinicians inflating time, admin hours, where they just like tell me about accountability, internal controls.
yeah.
How do we make sure that people are treating us in a way that honors our huge investment in this business? They're not walking away with
Yeah.
money that we didn't give them, that kind of stuff.
Trust but verify, right? I believe
Okay,
as a
trust but
practice owner,
verify. That's
you cannot abdicate responsibility.
mm,
I personally don't love cash in a practice, cash or even checks. Like
mhm,
I don't think in 2025 that there's a reason to that it makes sense to keep doing that, right? I believe in making it easy for people to pay you.
mm,
And once in a while that will be a check, but it's not the norm. And so having systems around that, a system will always help, right? Where that gets reported to you, there's a clear process on what happens so it doesn't just disappear.
mm,
Um, and then having some limits, right? Some just good old policies in your handbook around admin time. I just don't believe that admin time should be unlimited. There should be a cap on it. So if someone does more than is expected, you legally have to pay them. But then you can have a discussion on like what's in the handbook, right? Because it's
mhm,
clear, it's super clear, and everyone is on the same page to just kind of limit that. But what I actually see happen way more often is just general fraud. We had this
mm,
happen with a client recently where a fake email was sent by one of their employees that was not their employee. Hey, I want to change my bank account. They did not ask any questions, change the bank account, right? I think that's just
yep,
much more susceptible than actual fraud. Although fraud does happen, like embezzlement within a company, but it's often more like bad actors outside trying to come in.
yep.
And I think that's more expensive in the end, usually.
I'll tell you. So we've over the years we've gotten burned twice by that payroll scam, right?
Yeah.
And they've gotten AI's made it incredibly
Yeah.
harder to discern because they'll say something like, this clinician has a blog right in their voice, a request to change payroll or whatever. And so it sounds like that clinician. It's not, broken English or something like that. The simple step of we do not change payroll information without a verbal confirmation from that clinician. It doesn't matter if the payroll is going to be late, like it goes, but simple that human check-in has been a
Yeah.
big piece. So I've
Yeah.
seen
And for,
more practices do, phishing testing, like
yeah,
just running incremental tests to see if people
absolutely.
take the bait. What were you going to say?
So for us, like we work with Gusto primarily, which has a self-service portal, right? So my response is always like, okay, great, here's how you do this in the portal, right? With a link to instructions. And that would be for my team internally, but also our clients. And you do it yourself, right? Because if an employee
Mhm.
wants to change that, great. They should be responsible for their, like, I don't want them to send that information to me by email anyways. Like, put your new banking information in there, and then we usually will get a notification. We'll still verify it at that
Mhm.
point again. But just the more you can have team members do that on their own and not be
Yep.
responsible for it, because
Yeah.
you don't even want that banking info in
Mhm.
email or in
Yeah.
chat or Slack or whatever.
And I think there should be, I mean, just in general, like if people have credit cards, if all that kind of stuff, there has to be intermittent audits, things. I mean, it's I think over time these problems seem to grow. A lot of the embezzlement that I've seen for years, including in my own practice, they didn't come in day one and do that. They got
Yeah,
a little loosey goosey with something. They ordered an extra pizza to take home from the office Christmas party.
yeah,
But when they realize there's no controls around this, just human nature, right?
yeah.
People start biting off more and more. So
I'm going to add another piece to that. You also, as the owner, you should have access to everything. You should have a
yes,
login to absolutely everything in your
yeah,
practice, like the Amazon account, right? It should not be just in the email of your admin. You need to be able to log it, even if it costs you more, right? Sometimes it's like, oh, I don't want to pay for another seat. Pay for the extra seat. You need to be able to get into everything.
yep. Tell us about working with GreenOak and Julie and Profit First. If like you're just a font of wisdom and that kind of stuff. If somebody wants more of this, tell us
Yes,
what you do, how
there's
you
a
work
lot of
with
different
practice.
ways.
Yeah.
Awesome. So first of all, my accounting firm, that's kind of the main thing that I work on, that is GreenOak Accounting. We specialize in CFO services for private practice. So, right, if you're looking to kind of have someone to make decisions with you, to support you in these compensation discussions and calculations, and not be alone in all of that, that is what we do. We of course do like all the bookkeeping and tax and all the other like accounting things that go with that, but
Yep.
really kind of that decision making and thought leadership is really where we are helpful to a lot of
Mhm.
practice owners. I have two different books now. I have Profit First for Therapist workbook. I have Profit First for Therapist. They are really companion books. So I put everything I know about therapy practices into those books. I did not hide anything or gatekeep. So that's a super accessible way to kind of get into our universe and get some really useful information and do some of the work on your own. I also have a podcast, Therapy for Your Money, where I talk about all financial topics for private practice that can be really helpful as well. So all of those kind of lead back to GreenOak Accounting. So you can always schedule also a free consultation with us to just low pressure, no pressure, see if we're a good fit at greenoakaccounting.com.
Awesome. And I'll vouch for Julie. Again, I coach a lot of practice owners, a lot of multi-million dollar practice owners. A bunch of them use Julie. It's streamlined that part of their life so that they can focus on the other stuff. And nothing's free, but the cost of making a mistake, especially on the accounting side, tax side, payroll tax side, one mistake, you wish you would have hired a professional, right? So we're therapists, we're visionaries. Let somebody like Julie and her team do the brass tacks. So,
Yeah,
Julie, as always, I love it. There's stuff I learn every time. Thank you for doing this, and we're excited to have you on future stuff. So,
yeah, so
if you
good to
all
see you.
haven't, go check out at semiprivatepractice.com. We got a couple things coming up that Julie's going to be involved in. So, come see more of her. Thanks, Julie.
Thanks, Ken. Good to see you.